What are we talking about? This week we're talking about mortgage interest rates. Crap? You said crap.
I know, because we're staying on this. Anywho. Alright. So what's going on this week?
What is going on this week? What is going on this week are rates. Rates are dropping. It's a good thing. It's a good thing for our industry, but it's an even better thing for our borrowers out there in America and our realtors. Because lower interest rate means that we can qualify borrowers for an even bigger home. You know, it's a good thing. It's a great thing.
So cool. So have you had anybody reach out to you this week about rates dropping, or?
I have.
Situations like
you
that?
know, a lot of clients this week, about 3 or 4 clients that have reached out to me in the application process, and they're literally, you know, clients only know rate. You know, it's just rate. They don't even want to know what their payment is. It's just rate. It's like intrinsically in their head, that's the only question they know what to ask about, which is fine. But a lot of them, the interest rates that they're seeing online is very deceptive.
Yeah.
And yesterday I had a client I was speaking with that was quoted an interest rate of 3.5%, and I literally told him that's a great interest rate. You know, where did you get this rate? And he told me, you know, the bank is one of the national lenders, I should say. And I looked it up and I said, you gotta be cognizant. You gotta look at the interest rate that they are quoting you online.
So where can they find that information?
On their website, on any financial institution's website. You know, if you go to their loan department, look at the interest rate, look for the APR, number one, and look to see if they're charging discounts. On this particular individual, he was being quoted a great interest rate, but they were charging him 2.25 in discount points.
Right, and they disclose that on their website.
They have to disclose, yes. Either they have to disclose it in the form of loan discount points, actual points, or in the form of APR, an annual percentage rate.
And discount points are?
Usually, it's not usually, but discount points are always going to be a percentage of your loan amount, which is going to increase your closing costs, and that's huge. You know, it's a big cost. And if this particular bank was quoting 2.25 points on a $200,000 loan, that's a lot of money. You know, that's over $4,000 in closing costs or discount points, in addition to closing costs. So
right.
I had to educate this client, and that's my job. I love doing that. And ended up telling them, you know, it's really not always that great of a deal.
Yeah, it's not always beneficial because of how much you're going to be paying at closing versus how much a month that difference is in rate.
Correct. So you know, we gotta educate our clients out there.
Mm-hmm. And so, what did you show him to, you know, educate him? The amortization schedule? Well,
no, not yet. I mean, literally, what I showed him is I showed him how to go online and how to look and really see what the interest rate he was going to get. And I kind of educated him and said, look, ask him what a normal interest rate would be with no discount points and compare the differences. And I told him, you know, let's figure out the cost effectiveness between the lower interest rate at 2 points or 2.25 points and a par interest rate, and is it even going to be worth it for this individual to be able to pay 2.25 points to save, you know, $70, $80 a month, you know. And I'm spitballing here, but I did do the numbers for him yesterday, and at the end of the day, the client's like, that's ridiculous, Rob. I'm not going to do it. I'm not going to, you know, I'm not going to pay for the discount points. And I told him, nor should you, but you know, collectively out there, you know, we got to educate these clients and tell them, look out for the pitfalls. You know, we got to educate them as far as where to look, because they're not going to know, unfortunately. I know that was horrible. I saw you smiling, you know.
You know, it's just not the interest rate that you have to pay attention to, but also the discount points, but also the origination fees as a lender. You know, because always they can be lower in rates, but they're charging you discount points.
Or it could be a combination of both. There are some deceptive lenders out there, and they're not all like that, you know. But a lot of times they won't quote pure discount points. They'll charge a loan origination fee in addition to their standard lender fees to be able to mask away the deception that they're charging you a discount point. They'll call it a quote-unquote, you know, loan origination fee in lieu of calling it a discount point, because the discount point does have a negative connotation in this industry, especially with you, the borrower. So you really gotta make sure that you look at the loan origination fee if they're charging you one, discount points, as well as the other ancillary fees that a lender's gonna charge. Because you know, it's not easy for a consumer to be able to really determine what is the best product out there for them.
To compare the fees worksheets.
Yep.
Yeah. Whenever a borrower is looking at rates, like they always do and they should, what should they look out for as far as the rates and then their APR?
APR, that's a common question. I hate it when I say all the time, by the way. You know, like I don't know the answer, so I do apologize. But when it comes to your annual percentage rate, that basically, if you have an interest rate of 4.5% right now, and you have another lender, ABC Mortgage Company, has a 4.5% interest rate, how are you as a consumer able to determine who's really giving you a better deal? That's where your APR comes into effect, the acronym for annual percentage interest rate. So if you've got one lender, 123, offering you 4.5% interest rate, you've got ABC Mortgage offering you 4.5% interest rate, one APR is 4.6% and one's 4.9%, that's how you know who has the more junk fees associated, for lack of a better word, in originating that home loan. They're gonna have the higher closing costs. If you've got two lenders that are evenly an interest rate, but one has a higher APR, that means they have higher closing costs. And that is a way the government got involved to be able to help a consumer make a better decision when they're comparing different mortgage companies. Is if both interest rates are pretty much the same or equal,
they have to disclose their APR. And you'll notice
everybody has to disclose their APR, correct? But whoever has your higher, if you're comparing apples to apples and you're both at 4.5%, look to see who has the higher APR, because whoever has a higher APR has more in closing costs.
All right. Okay, well that was this week's video talking about interest rates and APR. So hit us up in our DMs if you need any more information. So we'll reach out.
Have a good day. I don't know what DMs is, but it's all good.